Thanks a lot, everyone, for joining. We're going to talk a little bit about how to win in the current housing market. It's a crazy housing market we live in today, and hopefully, I'll be able to share some tips with you to actually succeed in the competitive housing market that we experience or are experiencing nowadays. My name is Kimo. I am the founder of Expat Housing Network, and I'm half Dutch, half Caribbean. I am a proud father of a daughter of 4 who actually thinks she is 16 already. So that's the 3 or 4 teenagers there. And I bought my own home about 5 years ago. Um, that was before I actually got into helping others out. And I made a lot of mistakes. I did a lot of things wrong, and it took me 7 offers before I got my offer accepted back then. Um, learned a lot since. It wasn't necessarily the reason why I got into this business, but looking back at it, if I knew then what I know now, oof, that process would have gone a lot different. And that's what we're here for as well, to add value to you guys today, to make sure you don't make the same mistakes, but most importantly, to help you actually secure a home, because that's a challenge enough on itself. I'd love to get to know you a little bit better. So what I've done is I've created like a little poll. Maybe share your answers. It's not mandatory. I'd love to learn a little bit more about you guys and see if I can tailor make the webinar for you. There's a few questions there. Where did you find out about this webinar? How old are you? What does your household look like? What made you decide to buy? Pop it in the poll, and we'll continue with the presentation in about 20 seconds. That should do it. Thanks a lot for that. So the majority of you have found us via social media, are between 35 and 45, and the reasons to buy are different. The rents are too high, which I completely understand. You would like to settle, which is a big compliment to the Netherlands, so welcome, we'd love to have you. And you would like to build up equity, which is a bonus, of course, of owning a home. Thanks a lot for that. Let's move forward. We're going to talk a little bit about the mind state, getting to know the housing market, what's your reference, but also the tips to succeed in the current market. I believe that preparing for entering the market is half of the work. I'm going to share a little bit more about EHN, of course, because I believe that agency, or what is it? What's it called? Greatness is achieved in the agency of others, and these are the people in the team. We've recently had a new joiner. He'll be added to this presentation. His name is Rick, and we're a very diverse team. So I think it's nice to see that we've actually all gone through the same process of moving to a new country and setting up a new life there, and buying a home. And especially in the Netherlands, these guys have a lot of experience under their belt now, so they'll be able to support you in your search or in the securing of your new home. Then, what else is important to know? We're not traditional real estate agents. Why is that important? Well, I always like to compare a real estate agent, or make the following example. A real estate agent has 2 separate clients. One is a client that wants to sell. The other one is a client that wants to buy. Selling a property is currently easier than buying a property. So naturally, the attention will go towards the selling client, and not so much towards the buying client. We're also not traditional real estate agents because we don't have like a similar background in real estate. We have similar backgrounds in liberal arts, psychology, people services, and that's what our main focus is: making sure that your experience is a pleasant one. Of course, we've got a lot of information and knowledge and a big network nowadays. But the core focus of us is to actually make sure that that experience from yours is pleasant, seamless, and then you can transition into your new home. And we charge a fixed fee, so no commission, no hidden fees. We'll talk about the fees a little bit later. And we always like to actually settle into a new country. So also from that kind of like emotional, social perspective, we know what it's like. These are the 2 packages that we offer. One is an accompanied package, unaccompanied, I mean, sorry. We do everything for you except for the search and scheduling of viewings. We do the intake, we do the property review, the market value definition, submitting the offer, negotiating, reviewing all the legal documents, doing third-party bookings, the transport support, all that stuff within 2,000 euros. No fixed or no hidden fees, no extra taxes or anything like that. That's what you'll pay. The complete package is where we hold your hand. We actually book in the viewings. We go to you with the viewings, or go to the viewings with you. We attend everything, the technical inspector, the notary, and so on. And that's more the attendance. And we charge about 4,800 euros for that, including everything. Um, what's our added value? Well, selling agents take our offers more seriously, and we can sometimes book in viewings when it's no longer possible. And we support, of course, by reviewing the documents. And then one of the most important things is actually defining the market value of your property, so you know what you should offer and why and how you should win the bid. And of course, we'll inform you about things like rules and regulations. We make sure you don't make the same mistakes that I made when I started 5 years ago. Seven offers. We don't wish that for you. So hopefully you'll be able to secure a property in a much faster and easier and more efficient way. I know we can support with that. Um, 99% of our clients finally buy a home with our assistance, and the majority of our clients actually buy at a price equal or lower to the market value. We'll talk about market value in a little bit, by the way. Okay, but before you go into this business or into the market, actually, as a client, as a home buyer, it's good to start off with the right mindset, because the market is going up. Actually, this morning, a report came out from the Rabobank that the market will increase about 10% this year. So we're not seeing it slow down. Last year, between last year and now, I think it was about 11%. So maybe it's slowing down a little bit, but still, there's a big emphasis on buying a home. So what does that mean? That prices will continue to go up. How is this relevant for you? First of all, you might feel that you're at the peak of the market. Honestly, 5 years ago, when I bought my home, I had the same idea. Like, oh, maybe I'm at the peak because it's been going up for so long. And I think it's very, very important for you to know, like, what are the reasons why the market is going up? Because you can't really compare it to any other market, the Dutch market. And if you think that it's going to go, that it's at its peak, then maybe you'll be a little bit less willing to move forward, or a little bit, or less willing to move or offer a little bit more than you are when you think that it's still going to go up for a decent time. Let me give you some context. What causes the price to increase in the Netherlands? There's the first and the most important thing is fiscal benefits. The government has offered tax exemptions for people that are 34 years or younger, or that buy a property up to 400,000 euros. That means that they don't have to pay transfer tax. There's also something called interest rebate, which means that you can deduct the interest of your mortgage, or of your mortgage, off, so you deduct the amount that you pay in interest. Geez, guys, sorry, I'm a little bit all over the place now. So let me rephrase that. So the interest that you pay on your mortgage, you can deduct that from your taxable income. So at the end of the year, you can deduct that money from your taxable income, and which means that you get some of that money back. It's about 40% depending on which tax bracket you are. um, that is very, very interesting, because suddenly your monthly costs will go down. And there's also no capital gains tax. So when you sell your property, you don't have to pay any taxes over the profits that you make. So it's very, very interesting for people to own a home. Well, combine that with low interest rates, because they're historically low. I think they're around 1.5%, and it makes it even more interesting to buy a home. And then add high rents to it, because rents are relatively high in the major cities. And then the decision between renting or buying is easily made. Maybe once you've moved here, you'll rent for 6 to 12 months. But then you're like, if I spend that much money, it's just money down the drain. So I should actually go and buy something. So we're seeing more and more people flock towards the buying market. Okay, cool. Then there's lack of supply and demand. The government, and most likely the project developers and the real estate agents, they all say there needs to be more housing supply. We need to build more houses. I don't think that's the main reason why we ended up with this increase. If the market's not regulated, then prices can go up, 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 up. Especially if the amount of money that you can borrow is linked to how much value of a property is. We'll talk about that a little bit later. Lack of supply has, of course, some impact on it. But what you do is you can manage that demand by making it, for example, less interesting to own a home. Well, not in the Netherlands. We have a very liberal government, so they really focus on making it interesting for the electorate to own homes or to buy homes. So that is a good sign if you think about prices going up. Um, then you know that. So I don't foresee the price going down in the next year or the year after, or maybe even the year after. Maybe it's going to slow down a little bit, like the increase, but it's not going to go down. Of course, I don't have a glass ball. If I would have a glass ball, I would probably be on the beach. Now I can only create a background that shows that I'm on a beach. But for now, I don't have a glass ball. I'm not a financial specialist or an econometrist. But looking at the trends, looking at these previous numbers, the government's not going to do anything about those tax benefits or fiscal benefits. So I foresee a increase in value of properties in the next few years. Okay, then you know that, right? So market will increase, so you feel a little bit more comfortable entering the market. Then it's good to know what you want to spend on your property, right? And a lot of people actually think that your rental price should be equal or higher than the mortgage amount. Well, I think that's not always the good way to look at it, because you have something called principal as well. Principal is the amount that you pay off of your mortgage on a monthly basis. So let me give you this example. You have a rental price here. It's 1,400 euros. And then you have your mortgage interest, which is 700 euros. That's the money you pay to the bank for the mortgage, right? So that's money lost. But the mortgage principal is 700 euros as well. So you pay that off on a monthly basis. So you build up equity with that. Now, if we compare those two, then yes, it might seem like you have equal costs on a monthly basis, but technically you're saving 700 bucks. Okay, now look at the same example. So you have your rental price, 1,400 euros, and then you decide to buy a bit of a bigger house or take out a bigger mortgage. And then that mortgage is consisting of 900 euros interest and 800 euros principal. Technically your mortgage total amount would be 1,700, but if you compare what you're saving, technically 800 bucks on a monthly basis, that's what you'll pay off of your property, compared to the 1,400 euros that you would pay in rental otherwise, you'd still save 500 bucks. So I think a lot of people, they say, okay, hey, my mortgage amount can't be the same or higher as my rental amount, it has to be lower. That's not a way of looking at it. Like, prepare yourself for, okay, what kind of property would I like? And then based on that, you figure out, okay, hey, what does that mean in terms of the mortgage? And then you can look at your rental price, right? So I think it's good to have a proper reference as well, and consider the actual money that you spend or pay off of your mortgage as something that you'll earn. So you can play around with that a little bit. By the way, if there's any chats or if there's any questions, pop them in the chat, right? I can't see the Q&A from my end on this side, so pop them in the chat, and then I'll try and answer them throughout the presentation or at the end of the presentation. We're not with that big of a group. It's always very intimate on Friday, so pop them in the chat if you have any questions about anything that I'm saying. Yeah, cool. Perfect. Okay, preparation have to work. So, okay, you have done kind of like that mindset thing. Okay, so the market will increase most likely the next couple of years. Then I know what I can spend, or at least I should look at it like this, not compared directly to what I'm renting or what I'm spending on rent. So I have some room there. Then focus on a few things. These are the tips to actually help you succeed. Nailing your finances is very, very important. Why is that important? Let me tell you a few things. First of all, you want to define, of course, where you spend max on a monthly basis. This links a little bit to that previous calculation, but also links to how do you see yourself living, right? Like, what is important? How much do you want to spend of your salary on things like mortgages, your house, and stuff like that? Of course, it also depends a little bit on what you can borrow. And this is where the second person comes into play. It's an expert mortgage broker. I would always advise talking to a mortgage broker. Also talk to your bank, because they might be able to give you a good deal, but also talk to a mortgage broker slash advisor. Why? I always use the following metaphor. A bank is a retail shop. You go in there and they'll try to sell you the shoes they have or the clothes they have. And most often it's very limited. The mortgage advisor or broker, they have a range of mortgage providers to work with, and therefore a range of products. They are more kind of like your personal shopper or your stylist. They don't care where you buy, as long as it looks good, as long as you're happy, as long as the quality is good, and you know what you're buying into, right? So have a chat with them. Why is it so important to have a chat with these guys? Because of course they can inform you about what the maxes you can borrow, and tell you a little bit about, okay, hey, what does that mean on your monthly installments and how much you want to borrow. They can also pre-confirm the mortgage. It's not official, but since they have your case at already and they have a lot or abundance of experience, they'll be able to tell you, don't worry, you're going to get that mortgage, right? That will allow you to make an offer, for example, without a finance clause, which makes it more interesting to the seller as well. We'll get to the offer part later. They also can sometimes get your mortgage confirmed and approved within the cool off period. That happens after you sign the first legal document. You have 3 days to reconsider, wake up sweating at night and think like, oh, what have I done? You can then pull out without giving any reason or any consequences. If that cool off period ends, then you're committed to the property. They will be able, mortgage brokers, some, not all, by the way, will be able to get your mortgage application approved in that time. So you'll sleep much, much better. Okay, then they'll also be able to give you the best rates and conditions. For example, let's say you want to pay your mortgage off faster than you initially had planned. Is that something you can do? Right. I'm not talking about when you sell the house because there's no fines there. But let's say you want to pay off like 20K on an annual basis more. Some mortgage providers say, you know what? No, then we'll lose out on our money. So you have to pay a little bit of a fine or a premium. That's good to know. Also, figure out with these guys if you, for example, paid off the first 10%, maybe your interest rate can drop a little bit, right? That's stuff that these guys can inform you about. Let them work for your money. Anything mortgage related, any cost mortgage related is tax deductible as well. So you'll pay 60% of the actual amount that they advertise because you'll get 40% back. So definitely have a look at that. And if there's a difference of 10, a decimal, then that definitely with the amounts that we're currently spending on properties, that's definitely worth it down the long run. Okay, I know you have to spend on purchase fees. If you are 34 years or younger and you buy up to 400,000 euros, think about 3%. If you're 35 and older, or if you buy over 400,000 euros, think about around 5% of the purchase price. That is what you'll have to have, or what you'll most likely spend on purchase fees. And then make sure you have some savings. We sometimes get people that say, okay, hey, I want to buy a house for 300,000 euros. I don't have any savings. Yeah, maybe a little bit for the purchase fees. And I want to buy in the city center of Amsterdam. Um, wow, that's very unrealistic. Why? Because nowadays overbidding is the standard almost. I'm not saying you should overbid all the time, but it's more likely that you'll have to overbid over the market value even. And you don't have any flexibility there, right? So let's say something turns out to be a little bit more expensive, then it's very unlikely that the seller will pick your deal. So make sure you have some savings, save some money, especially if you're in a lower price bracket and if you're in very high popular areas, then it pays off to have some extra savings. Okay, so now you've nailed your finances. Let's move on to the fundamentals. The fundamentals will give you an edge, right? A lot of people ask me, okay, how do I use Funda, or how do I actually make sure that I get into the property or get viewing to a property? This is what you do. There's a few things to look out for. We'll not just focus on what you can do to view, but also focus on some information on Funda. Of course, you can save the search, right? So they can actually send you a newsletter or a reminder whenever there's a new property on the market that matches your criteria. Also, have a look at the relevance here. So here you can select dates. Whenever you browse on Funda itself, search by date, because that is the most important thing. Something that's on the market for 3 weeks most likely will be viewed and at the very last stage, and you won't be able to view it again. So have a look at properties that are no longer than a week and a half. Yeah, and that should definitely help. Availability, filter through availability, because oftentimes like um, it's very sometimes very like difficult to figure out if it's sold or not. You see like a little red label there, but yeah, make sure that you just filter on the people on the properties that are available. Cool. Then you have new. This is the status. You'll see under option or under offer, or you'll see sold. If it's red, if it's any of the last three, under offer, under option, or sold, then you'll not be able to buy it anymore. If it's new, then it's on the market for the last 24 hours. Then also look at the asking price, of course, and then we'll get into that in a few. And then this is probably one of the most important things. So whenever somebody goes to Funda, we always tell them book the viewing directly to Funda. You might not get the viewing, but you'll be in the system of the real estate agents. If you call, you'll always end up on on the bottom of the stack instead of on top, right? So make sure you book a viewing through this link. It says plan een bezichtiging, book a direct viewing. Do that and you're in the system with the real estate agents. Don't wait until you can call. So especially if you're on the weekend, sometimes properties are listed on the weekend. You find it on the weekend, make sure you reach out because you'll be in the system. Cool. Okay, then think about this asking price, right? Let's say you have a budget of 450,000 euros. Then 400,000 euros could work. I would say look at properties that are 15 to 20% below your actual budget cap. Why? Because a lot of the agents put properties up for below the market value, and currently properties are being bought for above market value. So that range you want to take into account that. Cool. Then look at a few other things when you're actually in the listing, looking, of course, at the price per square meter. This is how we compare properties. We don't look at total amounts, we look at price per square meter. Also, look at the VVE service fees. Why is that important? Especially if you buy an apartment and you buy it in a bigger building, then the VVE, which is the Owners Association, is responsible for maintaining that building. This amount will tell you a little bit about how well they're maintaining the building. On average, take into calculation that you pay €1.20 to €1.60 per square meter into the service account of the VVE for service fees. This case, it's a property that's 50 square meters. €66 is about 1.3 euros per square meter, which is doable, right? If this would have been 40 euros per month, then it's a bit low. If it would have been 120 euros, hey, that's a bit high. So ask questions about that as well to the agent. Then a few more things. Energy label, have a look at that. Sometimes this is an F or a G, then it's relatively low. If it's C, B, or A, it's perfectly fine. And maybe there's already some easy ways to move this D to a C, right? But have a look at that because it does impact your utility bills and the value of the property somewhat. Then also look at whether it's a property that is owned or that is on owned ground or that it's on leased ground. We call it freehold or leasehold. Freehold means you own the ground or the VV owns the ground. Leasehold means you're renting the ground from someone, most often from a municipality, sometimes from a private owner. If you lease the ground from a private owner, stay away from it because banks don't really like that because it jeopardizes the chance that you'll pay off your mortgage. If, for example, that private owner says, "Hey, I'm going to increase it by 100%." Then the last few things, if there's a VVE involved. By the way, I'm seeing a question pop up in the Q&A. I can't see the Q&A because I've shared my screen and I've made it full screen. So pop the question in the chat and I'll be able to actually look at it. Yeah, thanks. Um, what is our rights with VVE? Do we become a part owner of VVE? How do we resolve in case something goes wrong? Yeah, it's a good question. So what happens when you buy an apartment? You buy a part of the VVE. So you buy into, you can kind of like see the VVE as a company, right? And the company has a responsibility of that property. You buy a share in that VVE. So you'll become part of that VVE. And with that part, you'll have the exclusive right to use that apartment, that specific apartment. Um, and as in with companies, like divided amongst the shares or the shareholders, there'll be voting rights. Right? The voting rights is linked to the number of shares that you have, and based on that, you can actually vote on meetings and stuff like that. So on an annual basis, people will get together, the VVE will get together, and then you can talk about things that need to be done. But the VVE has the responsibility to take care of the public spaces, the outside, the construction, all of that stuff, right? So there are certain things you don't really need to discuss because they're in kind of like the bylaws. They need to be taken care of by the VVE. And that's why it's good to make sure it's a VVE that's properly managed, either by a professional, by a company, or by a very active VVE member. I hope that answers your question. If something goes wrong, then that's something you discuss with the VVE, and in the end, it's a vote as well. But the VVE also has a responsibility to maintain the property, because otherwise, banks will never allow people to buy homes if the VVE will not take care of the property. So when you buy an apartment in a VVE, also make sure if they have some money in reserves and if they have a maintenance plan. Why is that important? Because the maintenance plan will help with defining how much the VVE needs to save on a monthly and annual basis. That's as far as fundamentals go. I would say the top three most important things: make sure you book a viewing through the website, make sure you understand what the quality of the building is and the VVE as well. And don't forget to read the listing too, because there might be some hidden things in the listing that are not in the characteristics. Okay, now let's go to the value. This is super, super important. Let's go back to that previous property, the Sluisstraat number 50. It's on for €400,000. What I just mentioned, when you look at Funda, look at properties that are 15 to 20% below or below your mortgage cap, right? Why is that important? Because you'll probably need some space to overbid. Let me give an example here. So the asking price of that property is €400,000. The market value is €430,000. The actual purchase price is 460,000 euros. So this is what you're currently seeing a lot in the current market. This means that 60K is being offered over asking price, but actually 30K is being offered over market value. And why am I sharing this? Is because we get a lot of questions from people that say, how much should I overbid over the asking price? Why is this important? The following reason. The thing is, the asking price is the amount that the selling agent defines to attract people. He has a lot of freedom in that. So let's look at this is agent number one. Let's look at agent number two. He has the same property, but instead of putting up for 400,000 euros, he puts it up for 380. He has the right to do that, right? He thinks I'll attract more people, I'll sell it for a decent price then, and I actually have a good reputation towards the seller because hey, look at how many people I actually managed to invite and look at the difference in value I got. Market value, however, is exactly the same thing, 430,000 euros. And then the purchase price ends up being also 460,000 euros. But instead of saying that he was able to sell it for 15% more, this guy can say, hey, look at that. I actually got an offer for 80K more, which means it's 21% over the asking price. If everybody uses this narrative, then people will continue to go nuts because this is not what you want to look at because you have two similar properties that could be sold in a completely different way. So it doesn't tell you a lot about what you need to do based on the asking price. Next agent could even put up for 370 or 350, right? At some point, of course, it becomes a little bit stupid what the agents do, but we never tell people to look at the asking price as a reference. We always tell people look at the market value as a reference. The market value is what is important. How do we find the market value? I got a question. The question is easily answered. There's several places where you can find market value. The land registry is the most important one. That's the source. This is where you can find property values of properties sold in the neighborhood. How you define market value, there's a bit of a calculation there. Looking at properties sold in the last 6 to 12 months, similar properties, that means similar size, similar qualities, similar criteria. Look at properties that are not too far away. So you can't compare a property that is a kilometer and a half away that looks similar. No, you have to find it in a similar area. Those are the most important things. And where can you find market values or sold prices? You can look at the land registry or Walter Living, or we can help you with that. So there's definitely room for things to do there. Okay, for a winning offer. What's a winning offer? Okay, that's a question we get a lot as well. The winning offer is a good price, but it's not always the highest price. I actually had a case this morning where I got off the phone with the selling agent. He's like, you know what? We want to sell. I don't want to do like 60 viewings. The seller doesn't want to do 60 viewings. There's so many people. We want to sell for a realistic offer. And then we got into a conversation and hopefully we'll get our offer accepted. Um, but if, for example, somebody would have said, you know what, I'm going to throw all the money against it. And maybe let's look at the previous slide. Let's say somebody would have offered 500,000 euros for this property. But technically, the value is 430, so the bank will only give you this. If that person doesn't have 70,000 euros themselves, then they're not going to move forward. And if they're not able to share that information with the selling agent, then the selling agent might think, well, 500,000 euros, that might be a bit much, especially because I'm not sure if they have uh, own money. Okay, then somebody that would offer for 60 would maybe be able to get the property instead of the person that offers 500,000 euros. Why is that important? Because the seller will want security. So a winning offer is a good price, not always the highest price, and it is security. The seller will want to know that you move forward. Very often sellers will have bought a new place themselves, so they want to make sure that when they sell this place, it is actually going to be sold and not 3, 4, 6, 8 weeks down the line, the buyer is actually able to pull out because he didn't get the mortgage. He doesn't have enough money. There's all these reasons, right? Because that might jeopardize the actual buy of the new property for the seller. It might mean they have double the cost. Selling agents also don't want it because they have to start the process all over again. So offer security to the seller. What does that mean? Offer a good price, make sure you can actually pay for it, and that the seller understands that. Offer the least amount of hassle. So the more criteria, the more suggestions, the more things you want from the seller, the more likely it is that the seller says, you know what, I'm going to go for the easy offer. We've had one case in the past where somebody wanted to say, okay, hey, I want the seller to paint the house. I want the seller to do this. I want the seller to do that. And we were like, you know what, that's not a wise decision because sellers are busy enough with their new move. They don't want to like do all that stuff to the house, right? So calculate it into your budget, calculate it into your offer, and don't ask all those things to the seller. The same thing applies for foundational inspection, for example. If there's no issues with the foundation, there's no visual issues, there's no issues from your technical inspector, then don't plan something like that in because it means a lot of hassle. And a lot of hassle also means that there might be things surfacing that you're unsure of. And the seller doesn't want to feel that the seller's been living in that property for years. So they want to feel the security that you move forward and don't want that amount of hassle. That doesn't mean, of course, that you don't should not put the critical things in. I still think you should put a technical inspector in. We'll talk about that in a few. And offer a little bit of a personal touch, right? Share a little bit more about yourself. Share a profile, share a photo. Why? Because sellers often have an emotional connection with their home and they want to sell it to somebody that can appreciate the home similarly to what they do or what they've done. Um, they prefer to buy or to sell to owners who are not investors or project developers if they have a strong emotional connection to the property. So share a little bit more about yourself. Let me take a quick sip. Okay, we've come to our very last step, the very last tip, due diligence. Like I said, talk and make sure you get a technical inspector and an appraiser in. The technical inspector, I think I used the wrong word here, but the technical inspector comes in to inspect the property and make sure that you know what you're buying and that there's no big renovations that need to be done or big fixes need to be done. The appraiser comes in to define the actual value of the property. That's what we just talked about, right? This one, the actual market value of the property. Why? Because the bank will only give you this amount in a mortgage if the valuator has approved it. My question to you guys is when do you get these guys in? Do you book them before you submit the offer or after you submit the offer? Maybe pop the answers in the chat. I'm very curious to learn what do you think? Do you book these guys in before the offer or after the offer is accepted? Mhm. Cool. So the majority of you have it right. Um, After the offer is accepted. Why is that important? Because you don't want to spend that much money and then find out that the offer is not accepted. Some people ask me, but shouldn't we get like clearance on that market value before we submit the offer? And they were like, no, we can help you with giving you the range of the market value, but actually defining the final market value is something that you do after the offer is accepted. Before you sign the purchase contract, though. So there's like this time window, the time window of getting your offer accepted, and the time window of like the moment where you sign that purchase contract. It takes a week and a half. Make sure that you do these two things in that time frame and that you receive the reports before you sign a purchase contract. Or at least before that cool off period ends, the 3 days after you've signed a bridge contract. That is super, super, super important. Why? Because you don't want to end up being committed to a property or to a deal when you find out that the value is much lower than you had anticipated, or you find out that you need to replace that roof or boiler or fix that wall that's going to cost you 1, 2, 3, 4, 5,000 euros, right? So make sure you do this between offer acceptance and between you signing that purchase contract. I'm going to add a slide to that for the next time. I think that's good. Cool. So a brief recap. So before you start, get in the right state of mind. The market is likely going to increase for the next foreseeable future. What it will do after that, I don't know, but try and buy for a longer period. Don't buy for 1 or 2 years, right? Buy for a period of 5 to 10 years. I know you guys are not sure if you'll be in the Netherlands by then, but if you're not, you can rent it out. You can sell it again, of course, but make sure that you don't buy for a short period of time because that's just speculation. Um, Also, nail your finances. Know what you can borrow, but make sure you get the right support, right? If you want support with finding a mortgage broker, we're happy to help out with that. But make sure you get the right support because it's going to make your life so much easier. Banks don't offer that support. If you feel very comfortable about your situation, feel free to go with the bank. But the bank is not going to actively help you out, making sure that you can make the right decisions thereafter as well. They just want to sell, and they'll just be very passive. Also, use the fundamentals, so use the fund that to the best of your advantages. Make sure you actually book that viewing in. Doesn't matter if you work with an agent or not. Just get in there and make sure you book it, right? The agent can still call and say like, hey, my client's booked in a viewing, la la. But I think that it's good to be quick to act when you do, especially in current market. Always look at the market value, 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 value. Don't look at the asking price. Only use the asking price for reference when you actually want to look for properties in Funda, but don't use it as a reference to define what you actually want to bid, because the market value is key in that sense, because it's linked also to the mortgage, right? And then send a smart offer, send a considerate offer. What did we say? We said a good price, offer security, less hassle, and make it personal. And the last one, do your due diligence and time it correctly. Don't do it at the very last end. So the day before you sign a purchase contract, do it a bit before, between offer acceptance and between signing that purchase contract. This will hopefully help you secure a property in the current housing market. Had I known these things when I was actually looking for my own home, I would have been much better, much faster off. Any questions? This is the time for the Q&A. Any questions? I'm happy to answer them. What are the immediate next steps in case my bid is accepted? Well, congratulations. If that is the case, book in the technical inspector and book in the appraiser as quick as soon as you can. Once you've done that, make sure that you only sign the purchase contract when you have received those reports. Often, the selling agent will try and drive that process forward and say, okay, hey, we can sign in 2 days, but you want to do your due diligence first, yeah? Okay. I hope that answers your question. Then another question is, how many financial advisors can I hire? Or if I already have one, can I already change it before winning an offer? I think it depends a little bit on what kind of agreement you've signed with the financial advisor. Most often, there's no cure, no pay. You can, of course, switch. I will chat with a few of them and get a good feel for them. Make them work for your money, right? Most often, they are a little bit passive in the beginning. And then when you're closer to getting your offer accepted, they'll become more active because they smell that you'll actually become an active client. But get them to work for it. Get them to make sure that well, no, make sure that you feel like they're adding value to you. So if you haven't signed anything, then you're not committed, then you can actually switch financial advisor. Um, yeah, and they most often have a no cure, no pay. So once the offer is accepted and your deal has gone through and your mortgage is accepted as well, is approved, then they have the right to claim their money, but most often it's paid on the date of transfer. Can the seller select the notary? That's not a question. Yes, sometimes that happens. Sometimes the sellers select the notaries. That most often happens with projects, bigger projects, or a lot of new builds, stuff like that. Every now and then it happens because the selling agent wants it to, but they should state that, right? If it's not in the listing, then add it to your offer. If so, then you'll still pay for it. If the seller suggests the notary, then you'll still pay for it. Why? Because currently in the market, there's something called purchase cost, so kostenkoper, which means that the purchase costs are for the buyer's cost. That's what they mean. Any more questions? Cool. Thanks a lot. You know where to find us. Book a free intake, no charge, like no strings attached. We're happy to support you. If you have more specific questions, reach out to us. It's Friday. It's almost end of the day. Have a lovely weekend ahead. I think it's going to be quite sunny, and next week's going to even be spectacular. It was great to have you all. Have a lovely one. You know where to find us if you have any questions. Take care, and good luck with securing your new home.